Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. I did create this channel to help as many people as possible become independent and profitable Forex traders. So, if that is one of your goals, you are definitely in the right place. If you have been coming to my channel and watching my videos, you got the notifications on, and you love it, make sure that you are subscribed to the channel because it really does help the channel grow the more people that are watching and sharing the videos. I do really appreciate the questions that you guys ask in the comments. I love helping you all as much as I can on YouTube. That's really what this channel is for. But if you do need additional one-on-one assistance, or you are looking for a structured learning environment in a community of traders, you can register for the Money Mantra app, which I'll tag right here, and it'll give you all those things you're looking for. Now, just a disclaimer, the app is not free. Well, the program is not free. And that is why I have my YouTube. So you can choose how you want to learn and what you're willing to invest in. So in today's quick video, we're going to be doing a trade breakdown. And again, if you are familiar with my channel, trade breakdowns are where I review the trades that I've taken throughout the week. I let you guys know whether it was a win or a loss, and I actually let you know why it won or why it lost. And this is something that I encourage each and every person to do if you are actively trading, because if you don't know what you're doing wrong, how can you correct it to make it right? Back testing is extremely important. I do have a couple of videos on how to back test that you can check out if you're curious, but for now, we're going to focus on this GBPJPY trade. So as we can see from the timestamp, this trade was posted in the group chat on January 21st, 2024. It was suggested for a sell at market execution or a sell stop, which was highly recommended. Just because how volatile this pair had actually been, now, it was on a crazy bull run, which means that the market was consistently buying and buying and buying. But when I looked at the chart, which I'll get into, I saw that it had reached an almost all-time high once again. So the sell was really inevitable, which is why I set this for a sell stop, which is a type of pending order. I would prefer that the students catch the momentum of the trade going down versus trying to set a sell limit because I didn't really know how high the trade was going to go. However, I did say it would go at about 100 pips, and that's exactly what happened. But we're actually going to hop on the charts. And we're going to look at this GBP JPY trade. So I am going to put this in replay mode so that we can go back to what I was looking at when I first hopped into the market, and then we are going to see what actually happened. So when I first entered the market, this is what I saw. I'm just trying to get rid of some of these drawings. So when I first entered the market, this is pretty much what I saw. I saw that the market had hit a stall and it looked like it was having a hard time going up any higher. Now, usually when the market does this, it's called an area of resistance or it's called a supply zone. And I'll just scroll back in the past so that you can see whenever the market is on the up and up, and then it hits a halt and a stop. Most likely it is going to come back down, which is why this is called the area of resistance. Price is literally resisting going any higher. And I'll just highlight some more examples of this. We can see price was on the up and up, price hit a halt, and then price came down, right? We can see price was on the up and up, price hit a halt, and then it came down. Up and up, halt, down. Up and up, halt, down. So that's one thing that I noticed when I first came into the market on Sunday was that the market was on the up and up for a couple of weeks, right? Because this is the weekly chart. And then it had hit a stall. Now, I actually wanted to see when was the last time the market got this high, because as you can see, the smaller and smaller that I make my chart, all these candles have happened over weeks. And the last time that the market had reached this particular high was around November 2015. So I knew that since it had almost been about 8 years, it was looking like it was going to turn around and sell. So that's the first thing that I noticed. Now, taking this down to a smaller chart, I did set up my supply zone, which you can see here at the bottom, and I did have my demand zone. Well, I have my supply zone at the top, which is red, and I had my demand zone at the bottom, which is green. Because when I'm setting my parameters for a trade, my stop losses and my take profits, I'm just using previous areas where the market already had a lot of activity. So I saw that it sold here. So why not sell there again? And I saw that the most recent time that it bought was here. So why not set my take profit in that area? Now, so I've already had one confirmation up here. Now, the next thing I like to look at is my momentum indicator. You will notice that when the market is going up, the momentum indicator tends to be going up as well. And when the market is going down, the momentum indicator will reflect that. Now here, the momentum indicator was moving kind of sideways. I didn't really have any strong confirmations here. So I'm just not gonna really count that as something that added to my reason as to why I took this trade for a sell. However, when I look at the stochastic, which is one of my favorite indicators, I have a couple of videos on how to take advantage of the stochastic. I did notice that my stochastic was facing down. Not only was it facing down, both of these numbers were below 50, which is awesome for me. And an additional confirmation was my orange line or slow line was above my blue line. Now, I want you guys to take a look at something here. Again, you'll notice when the stochastic is going up and the blue line is above the orange line, the market tends to be buying. Versus when the stochastic is facing down and you have your orange line on top of the blue line, the market will be selling. So once I saw what the stochastic was doing, again, that was an additional confirmation for me. I had the orange over the blue, I had it below 50, and I had it facing down. So that's 3 confirmations here, no confirmation there, and 1 confirmation up here. Now, I say this to all of my videos, but I do like to say that 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So once I had this information, this was enough for me to go ahead and enter this trade. Now, again, I did recommend this trade for a sell stop, which means that the entry would have been below where the current market was, and my entry was around 187,700. I had a profit level of 100 pips. Well, for the max profit, 100 pips, and then we're just going to do a 1-to-1 risk to reward ratio, and also set our stop loss here. Now, be mindful that the trade will not actually be triggered until it hits this gray line. So if it looks like it has hit stop loss, it has not. So here we go. We're going to see what happened. We can see that the trade was almost triggered within a couple hours after dropping. We saw that we had the market actually continuing to go up. It went back into our resistance and supply zone before it actually came back and triggered our trade, which was a couple days later. And we can see TP1 was finally hit 3 days later, which was today, January 24th. So this trade was a little bit tricky. I do still strongly believe that the market is going to continue to sell. So far, TP1 was hit. We still have 50 pips to go before we reach TP2. But if we zoom out, we can target this area, right? Which will be around where TP2 is for 100 pips. Or we can even go down further to this previous demand zone and set additional TPs, because this market, I do believe, is going to continue to be bearish, and extremely bearish at that. But that's really all I have for you guys today. I hope that this video was helpful. If you learned something or you just love the way that I teach, make sure that you do subscribe to the channel and hit the notification bell so that you never miss when I post another video. If you do need more one-on-one assistance and you want to take advantage of these trade ideas before they happen, that's another reason to register for personal mentorship and to join the Money Mantra program. Now, I really hope that this was helpful. If you guys have any questions, you can leave them in the comments below and I will be glad to help you. But that's all I have for you guys today. Until next time.